Hi, my name is Steven Everson. I'm principal with MRPR in the Ann Arbor office, and I'd like to take a few minutes to talk about two substantial changes to the R&D tax credit that took effect at the beginning of 2016. I've been practicing with the R&D tax credit for close to 20 years now, and these two changes that came into effect last year are substantial. The biggest ones that I've ever seen in my history in working with the credit. The first one relates to AMT tax. So the R&D tax credit is available to any company that's developing new products, improving products, developing processes, or improving processes. Manufacturing companies, software companies, technology-based companies, and these companies generally are able to get tax credits, sometimes 20, sometimes 50,000 or higher, based on the number of people that they have conducting research. And historically, a big problem for flow-through entities, S corporations, partnerships, has been AMT. And I see it a lot with my clients, with my technology-based clients. Even though somebody's able to claim a $20,000 or $30,000 credit, once those credits flow through to the individuals, to the owner's tax returns, this AMT limitation pops up, and these credits don't get utilized and they carry forward. Starting in 2016, the IRS eliminated the AMT limitation for businesses under $50 million in revenue. This is substantial. It's going to affect the cash flow of a lot of small and medium-sized businesses, especially flow-through entities, and it takes effect in 2016. We're working with our clients currently in planning for these changes and the cash that it'll generate. That's a substantial change. The other substantial change relates to startup companies. Again, we see this a lot in our client base. Startup companies that are working on a software project, they're working on something in the healthcare area, something technology-based, they're funded by venture capital, they're conducting research, and they're able to claim these credits, the R&D credit, but because they don't pay tax, startup companies are generally not taxable entities. Because they don't pay tax, these credits just end up carrying forward every year. Starting in 2016, again, for 5-year periods, startup companies can utilize the R&D credits to offset payroll taxes, again, affecting their cash flow. And for startup companies, cash flow is crucial. So being able to generate a credit of, say, $20,000 to $30,000, $40,000, and then getting some of those credits back from payroll taxes is, again, a substantial change for startup companies that starts in 2016.